Good afternoon. This is Ken Long from Tortoise Capital, and we're going to take a look at mechanical swing trading forward results. So these are systems that were forward traded in a mechanical way, following the rules published in the system descriptions. And these were all of a period in which swing trading was my primary focus, from about 2004 to 2007. And we've already looked at the channeling in another video, so I'll just hit that one first. These all, I would just notice, these all have decent enough system quality numbers to make them worth trading. The expectancy on them is pretty good. You can see what the annualized R gain is for the populations that were traded, and the number of days per signal. And I would just want you to notice that overreaction, channeling, triple screen, ETF2, washouts, they're all in this 5 days plus or minus a couple range. That these tend to be not the longer term swing systems. Just draw your attention to the washout continuation and the 5-day down continuation. I developed these as a module to add to the rule sets, since I noticed that after the first trade was completed, especially if it was successful, and then I would move on to other signals, I might come back a week later or 2 weeks later and discover that that was really just the first leg of it was a multiple leg up swing move of longer duration. And so while I was happy that I was getting good system quality numbers, I was disappointed that I hadn't been able to stick around longer to play what I have come to call the continuation pattern. So once I developed those rules and added them as an optional module for each one and then started trading them, I started to track the washout and then the washout continuation as the second or third leg of the trade, and the same with the 5DD, and that way could start assessing whether or not that second leg was worth taking. And if it was really good, maybe I could just use the first trade as a setup rather than a trade itself. But they're both good enough to trade on their own, and then the continuation pattern turns out to be something decent. And then later I was doing the failure patterns when we got into the bear markets of 2008 2009, and so you will see some reference to 5DDF and washout F. Those are ones in which the original signal failed, or the stop price failed, even if the original trade didn't take, but it just immediately fell through where I would have a stop. I wondered if the stop and reverse trade or simply going short at that point was a good signal. Yes, it is in a bear market. That's straightforward. So then what I did further out here is I started combining these scores into meta systems. So you'll see if I just took the washout and the 5DD and combined them, what kind of a system it would be. If I took just the continuation patterns for washout and 5DD, what would I get? If I took washout plus washout continuation, or 5DD plus 5DD continuation, or if I compiled all of these signals into one master swing trade system and allocated money on the basis of an intended time frame to hold, what would it look like? And we get this kind of score. So in most cases, what you're seeing are the reliabilities are usually are good. The continuation patterns tended to be shorter, but have a higher probability of that second impulse working. I think that's people buying on dips when they're already into the positions in general. And so good enough to trade. What I was more concerned about was the size of the average win versus the average loss as a buffer towards having maybe lower win rates. And that's, to me, what we mean by letting your winners run and cutting your losers short. If your average wins are bigger than your average losses, then I feel like you're approaching a good application of that principle. you never know in the trade what that really means. You can only make the decisions you make based on your criteria, and then fine-tune those criteria after a lot of data has been accumulated and statistics applied. So this is the roll-up summary. Now, in each of the rule sets, I've identified a number of different strategies or optional rules that could be applied to help you tune the systems to the way you prefer and to markets as they adapt. And so, without trying to be overly comprehensive on that, I only wanted to report the trades that I've taken, and then encourage you to do your own research on rule sets that make sense to you, and as you apply them to the markets as they are. But this should suggest that for considerable periods of time, the basic rules are going to get you into signals that are plentiful, directional, reasonable, manageable, and tailorable. So I think they form a good basis for proceeding into developing your own personalized swing trade systems. So that's what I'd like to say about these performance stats and the time frame they occurred in. So thanks for your kind attention, and keep going.